Well, shortly we'll hear from the Commonwealth Bank's new boss, but first, the big banks have been taking a lot of heat over raising rates and axing jobs. For many observers, the actions of the Big Four are symptomatic of an oligopoly with little competition. And that raises the question, how can genuine competition be restored? Andrew Robertson has the story.
The big banks have all lifted their mortgage rates, claiming rising funding costs are hurting their profits. But another record result from the Commonwealth has critics questioning the truth of those claims.
I think most primary school kids could understand that you can't on one hand say, look, guys, it's terribly expensive out there, we're going to have to charge more for your lollies or whatever a kid would buy. And the other hand saying, you know what, we're making record profits, whoopee, that's fantastic.
The numbers tend to support the view that Australia's big four banks are benefiting greatly from their oligopoly position. Return on shareholders' equity is a good measure of profitability. Commonwealth leads the way at nearly 20%, with NAB bringing up the rear at 12%. Bigger, equally stable overseas banks who compete in much more crowded markets don't earn the bumper returns of Australia's banks.
If the banks are government guaranteed, which they all agree they are, why do they need to generate 19, 20% returns on shareholders' equity, whereas government bonds are yielding 4 to 5%?
Christopher Joy says it's a situation which leaves all the other financial institutions in Australia with one hand tied behind their backs.
One of the solutions we've proposed is that the government guarantee that is provided to banks and deposit takers is priced the same for all institutions.
Christopher Joy works with Wizard Home Loans founder Mark Bouris at his latest venture, Yellow Brick Road. Mr Bouris says the key to that solution is for the quality of loans to be the focus of the government protection, not the institution offering the loan.
If we get the money the same price, we can actually really chop in hard to the retail price, like we did back in the 90s and the early 2000 period, where we took 20% market share from the banks, where in those days the banks actually competed for your business.
One man you'd also expect to be jumping up and down about the dominance of the big four banks is Mike Hurst, the managing director of second-tier player Bendigo and Adelaide Bank.
We are able to make inroads into the market share of other banks. Certainly we've been growing our representation quite significantly through our community bank model in the last 10 years, and that's starting to pay off.
He says the Big Four did get a free kick during the GFC funding crisis, but he's happy to accept the cards he's been dealt.
I don't believe they act as an oligopoly. I think it's up to every business that competes in a market to have a different value proposition that stands them out and gives them the opportunity to grow, and I believe we've got that.
Which is another way to generate competition, persuading Big Four customers to vote with their feet.